Well, good morning, everyone. Welcome to our Friday morning. Yes, it is Friday. Friday morning trading room, and you are witnessing history in the making as the S&P and the NASDAQ and the Dow and the Russell and pretty much the whole financial sector is opening. Well, the S&P did lock limit down yesterday, and it looks as though they've coordinated somehow to get the market reopened. But yeah, just a crazy, crazy day today. Andrew, yes, for those of you showing up in the room, Andrew says, I was wondering where my link had gone, and I got a new one. Unfortunately, the webinar software that we use, they used to tell us when we were running out of trading sessions so that we could schedule more. They no longer do that. So it's always a little bit of a surprise when, oh, hey, we have no more trading rooms scheduled. If you are trading a live account, I would probably strongly recommend to you that you go into sim today. The market is going to be extremely wild and unpredictable. As a rule, I don't trade markets that go limit up or down. In the past, I was fortunate enough to get caught in a limit market move that actually moved in my favor, which is great, but not so great if you happen to be one of the buyers yesterday. So we can hang out here for a little bit. We'll point out a couple of trades and such, but like I say, today you're only going to want to be trading in sim mode. You can see already the way the market is unfolding here. Just getting some crazy moves going on. And let me see what the volume is like on some of these bars. Oh, actually the volume's not too bad. But look at the Geiger counter here. When have we seen the Geiger counter move like this? I don't think it even moves like this on FOMC days. At least not recently. Andrew, the market went, the S&P went lock limit down yesterday through the, I don't remember exactly when it hit the limit, but the markets, a lot of markets have got limits on their daily ranges. So if the market moves too far in one direction, either higher or lower, the exchange actually stops trading. It's kind of like a circuit breaker in your house. You know, if you plug in your toaster and the toaster's on the fritz, you can blow the breaker. And the circuit breaker essentially keeps you from electrocuting yourself or burning your house down, or both. Well, the limit days are very similar in the financial markets. Limit days are most common in the grain and meat markets. It's very rare. I don't think I've ever seen the stock market lock limit, meaning it traded beyond its allowable trading range. Oh, yeah, Bill. Bill says the signals are still viable, though. Yeah, absolutely. The signals are still viable, but the problem with trading a limit day or just after a limit day, like right now we see the market rallying after it dropped You know, it finished yesterday near 44.65 and it opened this morning just below 4,300. What it could possibly happen here? Let's say you take a look at a buy signal. All right, so we've got a late filter entry signal brewing here. We could look to buy in. There's our buy signal. We'll place our stop here. And I'm just going to eliminate these for a moment. What could happen is that all of a sudden there are no more buyers and the market can plummet, and even though we have a stop at 4,300, we may not get filled until 4,280 or lower. So the problem with a limit day is that if the market is limit down, it means there are no buyers. Everybody is selling. There's nobody to take the other side of the trade unless the government steps in and starts absorbing all that selling pressure, which they may do. Well, it looks like they did because the markets have reopened. So somebody has stepped in and absorbed a lot of that selling pressure. What I think you're seeing now is a lot of reactionary buying, people taking profit on the open. So the market opens up and people say, I've had enough of this, let me out. And they're trying to get out of here with profit. But yeah, the signals are still valid. I don't know if it's necessarily a good idea to trade them live because, like I said, there's a very real possibility all of a sudden all the buying will evaporate and all you're going to get are sellers, and you may not find a buyer until, 42.80, because that's where they bought before. That's where they decided to step in. But yeah, the signals are certainly still valid. Good day to practice. Andrew's asking, can you roll back 50 minutes on the Hawk and Raptor and tell me how you would have traded it? Sure. So let's see, about an hour ago, so we'll go back to around 5:30 my time. Okay. Yeah, see how quickly, I'm just looking at the time scale down here and see how quickly all this is unfolding. It makes it a little bit, unless you're very proficient with your tools, it's also going to make it very difficult to trade. The first thing that jumps out at me is this first micro-macro cross signal right here. Now, lately I've been trying to run out my trades a little bit, and the last couple of days it hasn't served me very well. I would have been much better going all in, all out on target. But here you have a first micro-macro cross signal on your Hawk, which is a high probability signal. It's the type of signal that I pretty much take without exception, unless there's a really, really good reason not to take it. This is not a first micro-macro cross because the macro line is still gray. This is a first micro-macro cross. Now, I'll tell you the problem with taking this first micro-macro cross right here is we don't have a whole lot of structure above the market. So even though it's a high probability signal, you pretty much have to risk the trade up here. You see, there's also the danger that this may just be a bull flag type arrangement and we're going to see the market break to the upside. You don't know at this point. You know it's a high probability trade, but you don't know if the market's going to try to rally, retest the high before it fails, or is it perhaps a lower high as the market puts in, the next leg higher. So first micro macro cross, it is worth trying, but you're going to need to run your stop a little bit higher. And let's see, does it get down to the profit target? Nope. All right, so at this point, I'm starting to think maybe I'm stuck on the wrong side of this trade. And if I get a couple bars moving lower here, I'm probably going to start rolling my stop in, because somewhere through here, the sellers have to show up, right? They showed up here at the 43.18 high. I can't even get 10 ticks out of a trade. There's got to be some extra selling coming in here. So let's see if I can get another bar lower. There we go. So I would probably consider, if not bringing my stop in above here, maybe just a little bit above, or maybe even above that one right there. And now I would probably start to get a little bit more aggressive with my stops. See how these bars have tall wicks on them? That tells me that the buyers tried to buy it up, but the sellers managed to knock it down. So I could roll my stops in a little bit more, or if I'm using a stop strategy, it should be rolling at that time also. And now I could probably roll above this bar here that has that little itty bitty wick to it. And let's see, so now we would have, I don't know if we would have hit our break-even trigger or not, but we would be very close to hitting our break-even trigger. And you could bring your stop in a little bit more above the high of that. And there, we finally get our profit objective. But you can see it was key not to jam your trade, not to place your stops overly tight. You wouldn't want to place your stops right here or even above the crest on the macro line. I don't think that was enough to hold you in. You see the market came back, tagged you, and then went a little bit lower. So when you don't have a lot of structure above your trade where to place your stops, then it might be a good idea to leave your stops a little bit further back. Think of your stop like a safety net. You're on the high wire. In case you fall, the stop is there to protect you, not really to give you some sort of risk-reward equation. Okay, funny thing is we got another first micro-macro cross right after this one. How can that be, you say? Well, remember what the first micro-macro cross signifies. I know we call it a micro-macro cross because 99% of the time it occurs when the micro and macro lines cross. It's the first signal where everything is in sync. But look at what happens here. Everything goes out of sync. Bars are out of sync. Trend lines are out of sync. Filter is out of sync. Everything comes back into sync, and this again is the first signal where everything is in sync. Still not an easy trade because we're getting close to retesting the low down here. It is still a high probability signal. At the very least, I would cover my trade here. Why there? Well, because that's where the sellers made an effort before, right? We saw the buyers rally. The sellers tried to push the market down again. If you could afford it, above the high is even better. Just to give you some of that initial room, it's the type of trade I would probably just go in with a single anyhow. And now I'm looking for some selling to resume so that I can become more aggressive with my stop again. And there we go. We hit our profit target. So either location seems to have worked. We could have placed our stop above here. And then as this one started to progress a little bit lower, you could have rolled your stop in a little bit, effectively cutting your initial risk in half. Okay, and then market tails off. We get a macro pullback, but it's spoiled by the yellow bars. Oh, actually, there's a macro pullback signal right here that came right after the yellow bars. So the macro pullback signal occurs when you get the micro line going out of sync. Everything else stays in sync, however. So again, high probability signal, not, well, I guess at this point we can pretty much say the market's in a downtrend. I was going to say I'm still expecting that retest of the high, but I suppose at this point we can say, no, this market's pretty much in a downtrend. Getting a little bit of reaction even to the trend line. This stop here, probably still stronger than this one here. Why? Well, because we saw a greater move lower and a more concerted effort by the buyers to try to rally the market, right? They dug in here, came up a little bit, came back down, dug in again, came up, sellers got serious about selling, forced the market lower. This one, even though we still got that little bounce in there, it doesn't seem like the buyers were really trying. You know, the price here at 43.06 and down here at 43.04, they're all more or less in the same neighborhood. And the buyers may be saying, forget that, we don't really want to buy here, we'll buy back at 4,300. It's a better price, so that's what they tried. They tried to buy back at 4,300. Now we're up here and the sellers are trying to push them down again. Certainly you could cover above the swing high here, above the trend line at 43.08. That's a more aggressive trade. Just in case the buyers try to push again, you may get stopped out. So I prefer to leave the stop a little bit further away. And this one looks like it was no problem heading lower and hitting our profit objective. So a couple of really good opportunities about the first hour before the market even opened up. And look at what they're doing now, just a huge rally. Again, I believe a lot of that was profit taking. And there would be sellers selling all the way up here because of that huge opening gap. Okay, and Andrew says, can you look at the Raptor 2, please? Absolutely. So let's go back here around 539. Andrew says he was interested in something right here, 539. Yeah, the market seems to have topped out. Came down. Now, we've got a soft edge sell signal here. The soft edge sell signal is a counter trend signal. It must always be preceded by a test of the extreme, and the extreme in this case being this high right here. It has to have that. Without that, it is not a soft edge sell. Because it is a counter trend signal, we have to have a trend beforehand, right? If this market was, if our band was all twisted up and down and back and forth, we don't have a trend. But here it looks like we've got a moderately good uptrend, so we're producing a soft edge sell. You could consider shorting it on the signal and covering above the high. Now initially the first target is always the hard edge of the band. However, when it develops close to the band like this, it will often drift below. So your eye can be drawn to a alternate support level, somewhere down there perhaps, as a possible target. And then of course this would be the big target down here. All right, so get a little bit of a hiccup. Again, that's why you need to keep your stop a little bit further back. And now it looks like they're committing or recommitting to the move lower. You can start to get more aggressive with your stop. And there they go. They finally come down. And if you had a profit target here around 4,300, it would have been met. Our clouds are starting to cross over, so at this point I'm looking for a cloud crossover signal. And what that means is when the clouds cross, the market has a tendency to come down and then retreat into the cloud and look for support for the new move. So as the market retreats into this cloud, I would expect it to come out of here with a sell signal. And if it does that, then that would be a cloud crossover signal. We get our sell signal right here. So you could short from there. And again, the issue with the stop, further away is preferable just because it's going to give you a little bit more staying power and improve your ability to hang into the trade, improve your probabilities that you're going to get a profit. Yeah, so Andrew says, so the cloud doesn't tell you I'm not sure much, thank you. So the cloud does not tell you much, as that was a short, but the cloud is used to see if it holds the price. Well, yes and no. We anticipate bounces or reactions off of the hard edge in the cloud. So we've got a couple of hard edges. So when the market comes down into the hard edge and it comes out of there, we anticipate that reaction is going to hold and the market will rally. But when we had the failure here, when the market tried to rally and did not and produced a sell signal, that's why we were interested in perhaps shorting. Bill is asking, does the cloud on the Raptor give totally different signals than the Eagle? Yes, the signals are non-transferable. So I would not recommend that you, if you're trading the Raptor, that you try to trade a rule of three on the a rule of three, which is an Eagle signal on the Raptor. Each tool has its own unique set of signals. So here we've got the cloud crossover. The market goes into the cloud, comes out, produces a signal, and now we're looking, see, it's essentially a hard edge bounce also, right? It's very much like this one, except here our cloud was already stacked to be bullish, and here it looks like we're changing trend. So the market goes in, bounces off the hard edge, and now comes out, and we're anticipating that it's going to head lower. And your target, again, you could look back into your chart for a target, or you can preset targets. You know, a lot of times I'll go with the same target as the Falcon, $100 per contract. And there we go. We get a little bit of a double pullback. That's another Raptor signal where it moves into that cloud twice and comes out, produces a signal. So if you didn't take the cloud crossover signal right here, you did have a second chance at a double pullback signal. Same thing with the stops. If you're already in this trade, the market's heading lower, it has recommitted at this point, probably a good idea to bring your stops in a little bit, and then they continued lower. So very, very active market. Here's another cloud crossover, or pardon me, I'm mixing up my terms now. This is another hard edge bounce, and you're coming out with a sell signal. So you could look to short, and you could place your initial stops up here. And now you're getting a reaction to the lows, right? This is always serious when you see that reaction to the low, and I might give it a bar or two. Now I've got 2 bars moving against me. Now I'm starting to get a little concerned. Why? Well, look at what happened here. This is a soft edge sell. This may be building into a soft edge buy, right? We've had our retest of the low, but it's not breaking. We may come out here with a buy signal, and that would be a soft edge buy signal, but I'm already short. So I'm getting a market that may be putting in a bottom, so it's time to bring in those stops. And let's see what the next bar does. Okay, the sellers are stepping in a little bit. That's good. Ideally, I'd like to see 2 bars in my direction. That shows me a little bit of momentum. If I'm really anxious about the trade, well, I can start to roll a little early. But there, I've got 2 bars in my direction. The sellers have stepped in. I can start to, again, become a little bit more aggressive with my stop. I can go above this candle here that has that little wick. Or if I wanted, I could even go above this candle here that has this big wick. It depends how aggressive you want to be. Again, if this low does not fail at this point, well, then we're likely to come back with that buy signal, right? That soft edge buy. And so maybe being a little bit more aggressive isn't that bad of an idea. The market heading a little lower and now coming back with that buy signal. Look at the volume on this bar. So the buyer's trying to buy it up again. Big wick on here. Sellers seem to have recovered the market. So at this point, I would probably go to break even. And then we get the market tailing off a little bit. And hopefully that was enough to reach your profit objective. So a little bit trickier to manage, but still a fairly profitable looking opportunity. Yeah, this is, like I said at the outset, this is history in the making. Okay, just making sure I'm not missing anybody's questions, and please, your questions are more than welcome. I'm here to help you learn how to use your tools correctly and hopefully even find you a couple of good opportunities. Yeah, Jim says today would be a great day to use tick data. Okay, so Albert is asking, I'm a scalper, where would my entry be? Well, our scalping tool is our Hawk scalper. Or let me know if you've only got the Raptor, Albert, and I'll let you know. But with the Hawk micro scalper, we're going to be looking at our high probability signals. So for those of you who are new DTS owners, welcome. I see a few new names in the room here. And if you have not received these yet, well, not received them, if you haven't downloaded them from the website yet, you're going to want to pick up the cheat sheets for the Hawk and the Falcon, and these will help identify the high probability signals for you. Okay, so Albert says, I've got the Raptor. All right, let's take a look at the Raptor then. So with the Raptor, you're going to be focusing on these high probability signals that I was referring to. So if we go back here, well, I just highlighted some of them. We had the cloud crossover signal. So I guess you had your choice of this one or this one. This is the second one, technically a double pullback. So you could enter on either of those. So once we get the triangle and hash mark printing, that's a high probability, or pardon me, that tells us the trade parameters have been met. And from there, we're going to take a look at the signal itself and try to determine whether it's a high probability signal or not. Okay? The next signal occurred a few minutes later and is just your basic hard edge bounce signal. So that's, again, a decent signal. Remember, whenever the market intersects the hard edge, we're going to be looking for an opportunity to take that reactionary move. These signals, even though they're printing and even though they had follow through, tend to be a little bit more difficult to take, just because they don't fall into that category of a high probability signal. These are more like your average 50-50 type trades, or maybe 45-55 type trade. So here we go back into the hard edge now. Oh, at this point I'm starting to wonder, is this a soft edge buy signal? Remember the soft edge sell signal I showed you just a moment ago? Here's the soft edge buy. The big question is this the retest of the low? Remember I told you the soft edge signals must always retest the extreme. So in this case, the extreme price is the low. So is this the best of a retest that we can get? Well, maybe. It looks like the market's moving very quickly. All these bars unfolded from here on out. They unfolded within 1 minute's time. So there's a very real possibility that this is going to be your retest of the low. So this is a soft edge buy signal now. So you would look to buy here. Your initial target is the hard edge. So if you're just looking to scalp, you're in around 42.92 quarter, and your target would be 42.97. Or our high probability scalping target is $50 per contract. Stops, I would suggest, would go down here, and then we just saw the market unload and a real big move higher. Now notice our clouds are crossing again. Remember, when the clouds cross, we anticipate the market's going to try to retreat into the cloud, and we're going to see some sort of support from the cloud. But again, everything is unfolding so fast right here. Oh, are we going to get a decent cloud crossover? See, that's a much shallower crossover or pullback into the crossover than this one was. See, this one's a little bit more textbook. The market breaks down, the clouds cross over, market goes into the cloud, comes out, produces a signal. And in this case, it actually produced a double pullback signal as well, which means it moves into the cloud twice, into the hard edge twice, and then comes out and produces a short signal, or in that case, a short signal. So here we are, we're anticipating the market moving into the cloud offering some sort of support, and then the market coming out of the cloud. Problem is, everything is unwinding so fast that if you're going to take the trade, you do have the signal printing right here. You really need to decide, is that going to be my cloud crossover? Is that as much of a pullback as I'm going to get? And when the markets are moving quickly, sometimes the answer is yes. You're not going to get a serious pullback because all of a sudden it's all buyers, right? This is the best the sellers can do, is knock the market down for a half a dozen bars, and then the buyers take over. So let's say you choose to buy in here. Again, no structure. Where in the world are we going to place our stops? This is a really tough call. At the very least, your stop has to go to the hard edge. Why? Well, that's where, if this cloud crossover isn't finished, that's where the market's going to go, right? It's going to go into the hard edge. Ideally, I might even look at where the hard edge of the cloud crested. That would be kind of acceptable. The ideal stop down here, and I know you guys and girls hate to see that, but remember, your stop is only a safety net. It's not a stop unless it gets hit, right? So what does it matter if your stop is down here and you're risking $400? If you can afford the $400 risk, based on your account size, take the trade. Go in with a single, take the trade, but don't place your stop here because you only want to risk $70 or whatever the height of the bar is. Because there is a very real chance the market's going to bring you in and then come down and stop you out, and you're going to be $70 lighter, plus your commission and fees. So you may as well say it's going to cost you like $85. Well, you can call it $100 for easy math, right? But if your stop does not get hit, it doesn't cost you anything. And your initial stop doesn't have to be your permanent stop. I have no intention, if I risk the trade down here, I have absolutely zero intention of leaving my stop below 42.81. Or I guess it's 42.82. I have zero intention of leaving my stop there. Somewhere through here, if the market moves against me, somewhere through here, the buyers will have to rally the market. How do I know that? Well, the market just came screaming lower, and the buyers dug in hard at 42.82. Do you really think the buyers are just going to walk away if the market gets back down here, say gets to 42.90? You think the buyers are going to run for the hills? No, of course not. They already dug in hard at 42.82. Let's say the market retreats all the way to 42.90. The buyers will show up again, and then once I see that the buying effort has resumed, well, I can roll my stop up. And I can wait for the next little swing. If the buyers maintain control, I'll roll my stop up again. So even if I get stopped out at this point, it'll be approximately a third of what my initial risk was. So let's say my initial risk was $400 and I get tagged, well, now I'm out 130. If I got tagged here, I was almost going to be out 100, right? So I spend an extra $40 or $50 to try and give myself a chance to hang into this trade a little longer. All right, but in this case it was a non-issue because the market seemed to put in a decent rally, and that in fact did turn out to be your cloud crossover signal. That was all that the market could muster. So as the market continues higher, you can continue to roll your stops if you haven't already hit your profit objective. All right, so let's see what we have going on here at the moment. Yeah, thanks, Curtis. Curtis says, great advice regarding stop placement. If there's one thing I see people doing wrong all the time when they come to me for coaching, two things people do wrong almost universally when they come to me for private coaching and mentoring. One, they overtrade, almost to a man and a woman. You women are not immune from this. They overtrade. They trade far too many times during the day. Remember, trading is not like working a production line. You don't get paid more for trading more. In fact, you very often have the opposite effect. The more you trade, the less you earn. Your broker will love you. You'll get a really nice Christmas card and maybe even a basket of fruit, but forget about making any money. Just on that scalping note, Albert, I think you're new to our room here. I'll share a quick story with you. A fellow came to me a couple of years ago, said, I want you to teach me how to be a scalper. I want to trade 100 times a day. Because in his mind, to be a successful scalper, you had to trade 100 times a day. And I can show you how to trade 100 times a day. There's no trick in that. The trick is in making the money. The trick is in not getting killed on your commissions and fees. You can make all the money in the world, all the money you want and then some on 2 trades a day. It is not in the frequency. It is in finding a high probability signal and leveraging it correctly so that you can maximize your earnings. That's the true secret of trading. The other problem that I see almost everybody do is they jam their stops in too tight because they're trying to maintain some sort of fictitious risk-reward ratio. And no, I won't get up on my soapbox today. It's Friday. I can see some of you guys in my mind's eye rolling your eyes already. Oh no, here he goes. He's going to go into his whole risk-reward spiel. Generally speaking, though, the risk-reward is great after the fact. I don't think it's such a good decision-making tool at the time. For example, here we have a hawk signal. Oops. This is our first micro-macro cross higher. Should we take this trade? Well, everybody's eye is going to be drawn to these highs here around 43.62.5. And they're going to look at this trade and they're going to say, for me to take that trade, I got to place my stops right here because the market's going to stop right there. Oops, sorry, let's do it like this. I need to place my stop right here because the market's going to stop right there. Oh, no, I can't take this trade. I can't even get a 2-to-1 risk-reward ratio, and everybody says I have to get at least 2-to-1 or 3-to-1 reward versus my risk. So what do people do? They say, oh, well, there's only $90 profit there, so I'll place my stop right there. Yeah, now I can take the trade because I'm only risking $25 and I got a chance to make $85. That's a really favorable risk reward. That's definitely a 3-to-1. But what happens, and I think the market caught immediate momentum here. Oh, no, good example. So what happens is the market brings you in and then comes down and tests the low and stops you out. Okay, you only took a $25 hit. Not the end of the world. Well, let's say $25 per contract. Let's say you're, trading a $10,000 account or something, and you say, oh, well, I'll trade 4 contracts. Well, now you're $100 lighter. Okay, it's all right. It's only 1% of your trading capital. It's not going to wipe you out today. But if you keep doing this, you're going to keep stopping yourself out before the market gets up to hit your profit target. Or you're going to pass on a perfectly good trade because you can't get a favorable risk to reward ratio. Right now I know traders are looking at that trade and saying, I can't take that trade. It doesn't have a suitable risk reward ratio. And yet what happens? The market goes up and hits your profit target anyway, but without you. So what I suggest is rather than trying to manufacture a risk-reward trade, you know your entry signal, set a reasonable stop, and rely on your probabilities on the signal to make you the money. So here's a very reasonable looking trade. You can see I'm risking 2% of my capital. I'll be able to take 2 contracts here. I'm relying on the probability of the signal. I know the first micro-macro cross signal is a high probability signal. It works like 80% of the time. I'm giving myself a reasonable stop, so I'm not going to get tagged too soon. And the market goes up and finds my profit objective, thank you very much, and then heads the other way. So whereas other traders would have passed on that trade, I could have made $100. So I'm obviously not a fan of risk-reward ratios, and here comes a very interesting selling opportunity. So we've got the first micro-macro cross also, and we're actually working a 4-arrow consolidation signal. So we've got a couple of opportunities to get in. I don't think I'd take it on the hash mark. You might as well take it below the lows, give it a couple extra ticks, and you could probably frame this one maybe a touch tighter. This is just in sim. I wouldn't, as I mentioned before, I wouldn't necessarily recommend trading live today. I think you'd be asking for it. All right, so here goes the market. We're about to hit the break-even trigger. And you could certainly try to run this one out if you wanted. Somebody in Chicago is always bugging me first thing in the morning. Don't they know I'm trading? I can tell the area code. Now, the way the market is today, I was actually just about to delete the profit objective, thinking that maybe we're going to see it run out and resume that huge move lower that occurred in the overnight. Actually, the market seemed to have calmed down quite a bit. Not nearly as active as they were earlier, but that was a high probability signal. Nice little setup. Oh, hey, here's our raptor again. Look at this. We get clouds are crossing over. What are we expecting, class? What do we expect when the clouds cross over? I'll wait a minute for you hunt and peck typists. And you're cheating if you're watching it. Yeah, that's right. Greg says a change in trend. That's right. So we're going to let the market retreat into the cloud. We're going to let it come out and see if it's going to give us a signal. There's the warning dot. We can get our order ready, or there's the order. And I'm hovering on my sell button here on my Trailblazer. There's the signal. I guess I better get a stop in play here. See, here's the problem. We're right back down at the lows, but it is a cloud crossover signal. I'm trying to leave my stop further back. The ideal stop placement is above the high, and I'm not so happy that it rolled right there. I'm going to hold that stop just for a moment. Just looking to get a little bit of room here. As we get a little closer to the break even, if it looks like it's going to hesitate, I'll force it to break even. All right, that's close enough. And you see these bars with these little wicks on them? I could roll above those. We've hit the break even trigger, and we've hit our first profit objective with the Raptor. I happen to have a runner in play, so I have my profit target here for 20 ticks on the first one, and then I've got the other one open. Stops at break even now, and we'll see whether we can't ride out that swing. But a high probability signal, good opportunity. And again, if you're looking at risk reward ratios, traders are looking at this and saying, oh shoot, well, we got a signal right here. We've got support right here. I can't possibly sell that. Where am I going to place my stop? Right here? Well, that's impossible, right? I can't place my stop up here. I can't keep a favorable risk-reward ratio. No, you sure can't. You better not take the trade, because there's a chance you might make money on it. If you concentrate on the probability of the signal, though, the risk reward is fine after the fact. Like if you wanted, you could look at this trade now and you could say, all right, well, this was our signal. So we broke down below the lows, right? We covered above the highs. Oh, actually, let's do it like this. I don't have a real good tool for this, so we'll use my little box tool. Okay, so this was our signal. Our initial stop was way up here, but in actual fact, the stop only needed to be this high, right? Because that's all the market retreated against us. It engaged us, came up here, this stop held. So now what you could do is you could say, all right, I want a 2-to-1 risk reward type trade. So, oops, better not do that. There's number one, there's move number one, and look, see what happens? There's some profit taking going on there, right? We're not the only ones who considered that. And then that would be target number 2 down there. So we'll see whether the market can drift down there, and that can be our profit taking target. So you can adjust it after the fact and figure out where your 2-to-1 or 3-to-1 trade would be. That's okay, but don't try to do that before you take the trade. Don't try to do that and say, oh, well, I can't take the trade because I can't get a positive risk reward ratio. You know, I can't get my 3-to-1 or 2-to-1. No, concentrate on the probability of the signal. And I'm going to leave my my swing stop strategy in play. In actual fact, what have we got in open profit? I would probably start to be a little bit more aggressive with my stop at this point, maybe even using the parabolics, which are parabolics and our bar high low are the most aggressive stop strategies that we have. But I'm going to try to run this one out, and let's see if we don't get down to the bottom end of that little box that I drew. I think it's reasonable. The other tool, of course, you can use is the ultimate support and resistance suite. Look at the size of these zones. That's crazy. Monday's zones are going to be off the charts. So primary resistance not here until 43.01 3/4, essentially anywhere from 4,300 to 4,302. Anywhere close to that, maybe even 43.05 would be close enough. And let's get back here to the action on the Raptor. And so if you wanted a 2-to-1 trade, you could throw in a profit-taking order here. And look at what's happening. There's I was going to say there was a reaction higher. Look at this. There's profit-taking going on here, folks. Oops, I better close that out. There we go. I ended up buying 2 contracts instead of 1. And okay, now let's just hang out here for a moment and let's see if everybody ditched on a 2-to-1 reward type trade, or whether they're going to go lower still and maybe we'll get a 3-to-1. But my point is, this is known after the fact. It's not known real time. There was a famous documentary about Paul Tudor Jones, came out in the 70s. PBS produced it. You used to be able to view it online. I believe there's still the odd website that has it. There were some copyright infringements and stuff, and PBS pulled most of it off of the internet. But there's a scene in there where, and I forget the fellow who traded with Paul Tudor Jones said that, you know, they were talking about the day's trading, and he says, yeah, that's pretty good. We risk 8 cents to make $10. Yeah, that's really good. You better believe it. But I guarantee you that they did not know they were risking 8 cents to make $10 when they took that trade initially. They risk 8 cents because 8 cents is what they determined they could afford to lose if the trade did not work out. Oh, good. Good. Thanks, Keith. Keith says, Eric, I'm really enjoying and very appreciative of your teachings of the DTS and RTS systems. I recently purchased the Raptor. Well, welcome, Keith. And just by sitting back and watching and listening, I've learned a great deal. Well, I'm glad. That's, like I said, that's why I'm here, to help you guys learn how to use your tools so that you can trade successfully. So we saw a little reaction there. How much you want to bet we're going to get another reaction here? See, the early birds are trying to get out of this trade as it approaches that 3-to-1 level, and nobody wants to be the last one out. So they're trying to rally the market up here a little bit. But again, that's known after the fact, right? We're not going to know that as we set up the trade. We're looking at the probabilities. So whereas a lot of newbie traders are looking at this signal and saying, I can't take that. There's support nearby. And then they end up missing out on a move like that. Yeah, sorry, Tony. Tony got into the room late. He says, what's up with the new access code to the trading room? My apologies. The webinar software that we use, and I don't know why they do this, does not tell us how many meetings we have left. We actually have to schedule these. It's not like it's open-ended where you can just have a meeting every day until you turn it off. We actually have to preset the meetings. So Adam scheduled like 6 months worth of meetings, and the software does not warn you when you're running out of meetings. So we woke up this morning and surprise, there's no meeting scheduled today. Oh, great. So Adam worked really quick to schedule a new set of meetings and got everybody the access codes, and that's why you have a new access code. We kind of dropped the ball on that one. Hopefully we won't do it again, but that's what happened. Yeah, it's nothing personal, Tony. We weren't trying to ditch you or anything. All right, so now the selling seems to have slowed a little. I think traders are really kind of puzzled what to do with today. Got that huge move lower, got that big reaction higher. This could easily be a 4-figure day today, but honestly, that huge gap down in the morning and the fact that the S&P locked overnight, that would have scared me out of trading today, I think. I've got the S&P up on my other chart just to make sure it keeps moving. So here we are now at the bottom of the hour. Excuse me, an hour into the session. This is very often a time when we will see a reversal if there's been a dominant trend, but I don't know if we can say that about today. We've seen huge moves higher and lower. Yeah, see the whippiness? See how we're starting to introduce some more yellow bars? This is technically a first micro macro cross signal, high probability signal. I'll show it to you, but here we're going to have to place our stops down here. Oh, the signal just tripped. The issue I'm having with this one is that we've got the big downtrend, right? And we don't want this to turn into a bear flag. But with our scalp target, we're usually successful. So there's a nice little scalp. Is it going to turn into a full-blown reversal? I don't know. I would say no. I'm not sure the buyers are going to get anywhere near filling that enormous gap from the overnight. If they do, that would be very impressive. See, we're getting a little conflicted in our tools as well. See here how the hawk is looking a little bit more bullish. We're working actually a macro pullback signal now. The falcon working a possible trend change signal. Our trend line has changed color. The eagle, however, is still quite bearish. The eagle, we have the clouds going from bullish to bearish, and we're about to intersect the hard edge, so we would anticipate some sort of reaction there, but overall, the eagle's still looking quite bearish, not so bullish. I'll tell you what I would love to see, and here we'll go take a peek at the rafter. Now, notice these buy signals. These are not soft edge buy signals. They may well go up from here, but they're not soft edge buy signals because we did not get the retest of the low. Well, unless you consider this little itty bitty hiccup right there a retest of the low, which you might. Very often our soft edge buy is going to produce that way. You could have bought here anticipating the hard edge to be your profit objective. But what I would love to see happen is if we can get, oh shoot, that's a long ways away still. I thought these highs were a little bit closer. I was going to say I would love to see the market retest the high and fail. That would make for a very, very predictable sell. Yeah, I did comment on that, Tony. Tony says, have you ever seen the support and resistance lines so far apart? No, I don't think I have. Not in the NASDAQ anyways. The ranges between these are huge, and just for comparison's sake, this is today's range. I'm just going to roll back here. Oh my gosh, let's get to yesterday's range so you can see what they're like by comparison. Yeah, what a crazy night. More than one trader. Oh yeah, see, this is when the market was going. Oh no, sorry, spoke too soon. Come on, we're almost there. Where are my lines changing? Come on, there they go. Okay, so this is today's lines. These are yesterday's lines. By comparison, look at how much the ranges have changed. Is that crazy or what? That's crazy. That was a rhetorical question. So yeah, the zones are just enormous today. And it looks like everybody's cooled their jets. The huge breakdown in the overnight markets, big recovery to start the day, and now some mild selling, but not a whole lot of follow through on it. Looks like the buyers are going to give it one more push. You can see here we kind of have matching lows at 43.30. The eagle might get into a green bar sell situation. That would be a high probability sell signal for us. But honestly, you know, I'd be pretty content to walk away today with our Raptor trade and our Hawk trade. Given that the market's a little reluctant right now. Okay, so our macro pullback signal here got spoiled. Oh no, actually, sorry, you did engage the macro pullback. I was going to say it got spoiled by the yellow bar, but there's a macro pullback signal. Stops should go above the high, and it looks like you would have just hit your high probability target, I believe. Oh, just shy of it. Hit the break even. No, don't back up. Close that up. Late filter entry signal here on the Falcon. And you are getting a second push on it. Oop, gotta hurry. This is a little dicey because what's very likely to happen after the big move down in the overnight is that we may only see the buyers able to put this market into a trading range. You know, I don't think we're going to see a full-blown recovery here, but there is a real possibility that the buyers could move the market into a trading range, which means it's going to try to trade up here back to this 43.62, 63 area. That's what makes this trade a little dicey, even though it is a late filter entry signal. Problem is, where do I want to keep my stop? I suppose I could put it there above the secondary resistance line. And if we can see it breach that little trend line there, we should at least see it get down to the break-even trigger. Yeah, thanks, Bill. You too. Bill's off for the weekend, early weekend. Oh, I'm so looking forward to this weekend. I have nothing planned. My wife has planned nothing for me. See, and here comes this reactionary buying now. So we're going to look for the sellers to step in here again. We should anticipate selling somewhere around here. And getting a little reaction. Now if you, ooh, that wasn't very long. So there was some selling. Buyers came back and grabbed it. Seller's going to try to knock him down here somewhere. Okay, so we've got a couple bars in our favor. Now, if you wanted, you could roll your stops in above there. Because we're working a trend change signal now to the upside. So if the buyers come back and produce a buy signal, we're probably going to see a rally or an attempt at a rally. Again, if you're getting anxious on the trade, you could roll your stops above this bar right here with this wick on it. I do my best not to get anxious with the trade, but it's easier said than done. Going to get a late filter entry buy signal, which should be a high probability buy signal to the upside. Last chance now for the sellers. If they're going to defend this 43.46 area, or if they're going to walk away and let the buyers have it. Come on, give me another bar lower and I'll roll here to 43.43. There we go. Okay, so we'll roll 43.43. I haven't used my automated strategy just yet, just because the market is so crazy today. If we get a little bit more traction here, I'll probably move into the ATR stops or something. So we're seeing the buyers trying to protect their buying efforts. And once again, here's a bar with a little wick to it. You could roll above here if you wanted. I'm going to engage my stop strategy, I think. And if the buyers fail at this point, there's a good chance we're going to have an opportunity to get to break even. Remember, the better stop is still above here. But I'll let the trade manager do its thing. And you see how we're starting to go sideways? How it's starting to look like a consolidation and a trading range. That might be the best that we can hope for today. All right, so we got tagged on the ATR stop. We'll see here in a moment whether this 43.43 level holds. Wouldn't be the first time I stopped myself out too early. But look at the trend line here. See, whenever your trend line on your Falcon starts to look like a roller coaster, just you can tell by how the market is waffling back and forth here. You're in a sideways range. It's going to be very, very difficult trading. So maybe you want to wait for the market to emerge from that range, give you something a little more predictable, like your trend change signal. Your trading range, of course, your best strategy. Well, you have two options. It depends how aggressive you want to get on your trading. Option one, and this isn't one of our DTS signals, it's just basic, trading 101. When you're in a sideways trading range, you put a sell order at the top of the range, and you can change your stop type, your order type, to a limit, and you can sell the top end of the range. So let's say we're going to sell 43.45 and we're going to risk it to 43.50. So you sell the top end of the range, you buy the bottom end of the range. That's range trading 101. The preferred method, or the method I prefer, is to let the market break out of the trading range and then prove that it can stay out, and then look for your buy or sell signals. This is a more predictable way to trade a ranging market. Just ignore it while it's in the range, especially a range like this. It's relatively tight. Let it get outside the range and produce a signal, and then you can trade accordingly. But so long as it's moving sideways like this, it's going to be very, very difficult trading. All right, we got a green bar sell signal here on the eagle off the hard edge. The green bar sell, again, when we intersect the hard edge on the trading band here in the eagle, we anticipate a reaction. The green bar sell, green bars with a sell signal, tends to be a high probability signal. Problem here is, again, where in the world are we going to cover this trade? Ideally up there, but I can't afford that. So you end up, if you're really stuck on taking the signal, maybe we're going to risk it just above these lows. But because I'm thinking maybe the market's played itself out and we're going into a trading range, this might be the time to go in with a onesie. Even though I could afford the $400 hit, maybe we'll just take a single. Actually, range trading strategy number 3 is, it looked better on the Falcon. You've identified a trading range. You can attempt to buy the breakout. Instead of waiting for the retest, you can throw your buy order in up here. You can throw your sell order in down here. And you can try to trade the market as it gets outside the trading range. So 3 strategies. They're winding themselves up a little bit here, though. Note all the yellow bars here on the hawk. That's brutal. That market could not be more neutral right now. Okay, so here's the eagle coming back with just a basic hard edge bounce signal. The signal's probably going to produce right there. Again, you can put your stops there. And looking for that breakdown. Come on. You can also do a second push entry on the signal. With the eagle in particular, a lot of times the signal will engage and then the market will give you a little flinch. So what's happening right now, actually, the market's engaged. We should actually see it peel against us a little bit. And if the market, gets back near the highs of the bar, this current bar, then you can throw your order in below the low just to look for that renewed momentum to bring you into the trade. We have got some serious congestion here, though. Oh, come on. Break down for me. Come on. Come on. Oh, you stinkers. Wow. Are the buyers really going to try a rally? The buyers were strong out of the gate, no question. And it's hard to know whether that was just, traders buying value. Hey, the Nasdaq's under 4,300. It's a deal. Let's load up. Or whether that was profit taking, or both. All right, well, we'll put this one on the shelf for now. First micro macro cross here in the hawk, so a few things looking like the market's trying to perhaps head lower. If it gets below these lows here, we can sim the first micro macro cross. I wouldn't necessarily recommend you load up on a lot of these signals in a sideways market, but we're in sim mode, so we can do that kind of stuff here today. Man, what congestion. Amazing. I'm not sure I've ever seen the market this sideways during the day. Overnight, sure, but during the day? Flip a coin. Do you want to buy or do you want to sell? All right, maybe I'll run my stop strategy. All right, so you see this bar right here, that wick, that's significant. So we'll run a stop strategy. If we reverse above this wick, we may as well take our stop out. And maybe, just maybe, we'll see the sellers try to push the market back down here toward the bottom end of today's trading range. Get back down here to around 43.30-ish. So the hawk really struggling with this first micro macro cross. It is still a high probability signal. Doesn't mean that it always works, but ooh, got my fingers crossed. Keith is asking on the Raptor, how do you remove those background stripes? This is true for all the tools. Go to your indicator window and find your tool, and then roll way down to the bottom where all the cosmetics are. And the background opacity, yours is probably set at 2, so dial that down to 0, and it will make the bars, the background highlights disappear. Don't forget to apply it, or I think you can just click OK. Oops, there we go. Wow, what a crazy sideways market. Crazy. Well, is it possible we're going to see the market drift back to 43? Okay, so the hawk broke down, found our profit objective. Hooray for us. The eagle still working. It's working. And here comes the eagle now. Oh, baby, don't flinch that close. Okay, so sellers trying to regain the market now, trying to get some of that downward momentum going. And we're nearing the top of the hour. It looks like traders are pretty much done for the day. The rest of the session looks like it's going to be more of the same. You know, bouncing off of lows, retesting highs. If we get this bar to form near the low here, I'm snapping this trade to break even if it doesn't find the break even trigger. See, I'm looking for serious selling effort, which we have right there. Serious selling effort, break even. If the sellers fail now, well, that means that support is holding, and we're probably going to try to retreat back here to the 43, 46 area where they may just break above it and then head back down here and then go back up there and so on and so forth. So I don't want to put up with all that. If they've broken support, they should continue lower. If they don't, I don't feel like leaving my stop up here, leaving, you know, the better part of $200 on the table. There we go. There we go. Oh, and what a nice way to end the day. Hooray for us. All right, you guys, I think we're going to close up the trading room. Have yourselves a wonderful weekend, and I will see you Monday morning again, and we'll do this all over again. All right, you guys, we'll talk to you soon. Bye for now.